Hi, we all heard about what happened in Dubai due to a war. Once a very safe city is now all over the news. You probably think this is one of those content creators with no stick in the game. Then you're wrong. Indeed, I actually do own a property in Dubai, and every day I am pretty much quite worried about it. And I'm not here to present any solutions. This video will be a little bit different from my other usual videos. It's partly my sharing of my own thought, part analysis, why I bought property, what I think have changed, and the scenarios I'm planning around as an investor with skin in the game. So yes, I really own a Dubai flat. When the recent attack happened and the headlines started questioning Dubai's safety, the first thought in my head was not content idea. It was what happened to my unit. Should I sell? Can I sell? What price discount am I facing now? I actually invest in an off-plan apartment in Dubai, bought from Soba around 3 years ago. After living in Dubai for a year, feeling the vibrant pulse of the city, being convinced that it is actually growing into a major financial and wealth hub. So, why do people invest in Dubai in the first place? First, people. Dubai is one of the most international cities in the world. Roughly 90% of its population is actually expatriates, and only 10% of them are actually locals, Emirati. That means housing demand is driven by global professionals and entrepreneurs that actually moved into Dubai. People come for safety, tax advantage, opportunity, etc. Also, capital. Dubai is effectively an offshore wealth center. You can tell by the real estate and AUM flow. On the real estate side, Dubai Land Department data show annual property sales value jumping from around AED 170 billion in 2020 to AED 760 billion in 2024. It is roughly 4.5 times increment, reaching our 45% CAGR growth with more than 230,000 transactions, a new record high for the Emirates. On the AUM side, UAE AUM is around USD 1.5 trillion. If you compare to Hong Kong and Singapore, these two more established wealth hubs, they are standing at around USD 4 trillion. UAE is the world top destination for millionaires migrations, with a net inflow of over 6,700 millionaires moving into Dubai in 2024 for various reasons, including trade agreement, golden visa, used to be political stability and also cultural vibrance for sure. Okay, so if the fundamental was so good, you may have wondered who actually bought properties in Dubai. This understanding is crucial to determine how likely are these investors going to withdraw from the investment. So here the table shows the top 70% of buyer nationalities. My point of view is essentially there are two very different groups. On the nice to have diversification side, you have buyers from China and from the UK. For many Chinese investors, Dubai real estate is a way to diversify away from their domestic property and financial system, get a potential plan B residency, or to pick up a lifestyle or holiday asset with dollar link exposure. So when Dubai is no longer seen as a safe investment, pausing new Dubai purchase is a relatively simple decision and redeploy their money basically back to somewhere else. Although execution itself may be difficult. British investors, meanwhile, tend to treat Dubai as a yield and also a lifestyle upgrade, compared with a high tax, mature UK market. Better rental yields, sunshine, and much lighter taxes. We are actually talking about the differences of 12% stamp duty land tax in UK versus 4% one-off in Dubai, also up to 45% income tax on rental profit, plus 18% of capital gain tax in UK versus 0% of income tax and 0% of capital gain tax in Dubai. But because of their motivation is mostly risk return plus lifestyle, not existential safety, they are very sensitive to headline. This group can quickly stop adding new exposure even if they do not dump what they already own. So, on the high stickiness side are India, Saudi Arabia, and Russia. A large share of Indian buyers use Dubai as an operating base. They live there, they work there, run business from there. That means their property is tied to their real life, not just a spreadsheet investment. They might delay investment unit in downturn, but they are slower to walk away entirely. Saudi buyer often see Dubai as their natural second city, close, familiar, offering luxury, alternative, and also freedom that complement to their lifestyle in Saudi. Their risk tolerance for geopolitical risk is relatively higher. Also, Saudi buyers are usually from the more luxury real estate category, like Palm. They are more likely to negotiate harder and to be selective rather than to withdraw entirely. Russian buyers are at the extreme end of the stickiness. For many, Dubai is one of the few viable safe haven left to move capital and family out of a sanction-hit environment. They're not buying just for the yield, they are buying for life, but unless UAE itself face sanction as well, basically this is the last group that is likely to withdraw from Dubai real estate. So, how resilient is Dubai real estate market? This is not the first time Dubai property market hasn't hit. There were a few downturns across the history. So how long did Dubai take to bounce back? In the early mid 2000s, residential property prices in Dubai rose by about two-thirds between 2003 and mid 2008 before dropping nearly 50% during the financial crisis. The recovery took 4 years, but around 2013 or 14 prices had rebounded by around 80 to 100%, exceeded their pre-crisis peak in real term, mainly helped by economy recovery and also regulatory reform. Then, when COVID hit, apartment rents dropped by up to around 30%, and in some area, transaction activity fell sharply. Within 12 to 8 months, Dubai reopened and vaccine rolled out, the market flipped, one of the fastest real estate rebound globally. So correction in Dubai can be steep, as we saw, like can be up to 50%, but rebounds have historically been strong once the confidence returns and policy leans supportive. Although we all know past performance is not indicative of future results, so we actually have to look deeper. Have the fundamental for Dubai change? So we have proven resilient of Dubai's real estate market. The key question for us now is this time the same or the fundamental have changed already? Here we have to look at three particular risks. First, market risk. The attacks and regional war shift sentiment from Dubai is untouchable to Dubai can be hit. Since the war started, Dubai real estate sales volume have collapsed by roughly 40 to 45%. However, the big 20 to 30% drawdown you can see in charts are mainly listed developer stock index, not the actual transaction price of Dubai real estate. Potentially, it could be due to multiple reasons. Maybe there is no channel for the owner to sell it off, or maybe they're just adopting an hold and see attitude. Second risk is the developer and project specific risk. If you look back to 2008, some Dubai projects were delayed or cancelled when price fell around 50% in certain segments and developer faced funding issue. This is particular risk if you're buying from a very small developers. Today, regulation, however, because of the added escrow account, project freezing, and pre-sale rules, stricter than 2008. But if you are bought from a smaller or highly leveraged developer, construction timing and liquidity may still be a potential risk in a downturn. Third risk is the brand risk, which is the risk that I'm actually the most worried about. Dubai spent decades building a reputation as one of the safest major cities in the world, with strict security and political stability as part of the brand to attract expat and capital. The attack damaged the brand honestly. The question is whether the buyers see it as a one-off event in a still stable country, or the beginning of a pattern that actually changed the long-term potential. So, what could happen to Dubai property? What are the possible scenarios? In my mind, there are potentially two scenarios. This is where the analysis get a little bit personal. These are not prediction, it's just a scenario that I'm planning around as an owner. Scenario 1, prolonged conflicts and prolonged impact to property price. Say the war lasts more than 3 years with repeated attack in or near the UAE. Global media reframe Dubai from a safe haven to a frontline risk. In this scenario, I think personally, property price can be down as much as 50%, similar to the 2008 correction, but driven by security or political risk rather than purely financial factors. Recovery back to the previous high, if it could, would take more than 10 plus years, much like what happened to Beirut. If we look back to what happened to Beirut, Beirut was a classic example when risk becomes structural. Before the war, in 1950 to 60, Beirut was a major financial and commercial hub for the Middle East. With strong banking, trade, and tourism, this translates to a very high land value and active private development, especially in Central District. Prime coastal and central neighborhood already had high internationally visible real estate value and a significant share of long resident and international capital, somewhat analogous to Dubai, a regional safe haven supply constrained market. Then comes the war. Lebanon Civil War ran roughly from 1975 to 1990, with Beirut city center being one of the main battlefield. Large part of the core were destroyed or heavily damaged. Construction permits and new building area dropped sharply after the outbreak in 1975, and much of the pre-war housing and commercial stock in central Beirut became unusable or even abandoned, effectively wiping out the whole market. So, after the Thief agreement in 1989, a special company, Solidier, was created to reconstruct and redevelop Beirut's central area and replan the whole CBD. Apart from this, large inflow of capital from the overseas Lebanese and the Gulf investors searched for hard asset exposure in Beirut, treating prime property as a store of value in the unstable region. As time passed by, Beirut also resumed as regional service tourism educational center, which supported the development of the commercial and residential demand. So the rebounds took about 5 to 10 years, with price roughly doubling over a short period and reaching back around 5,000 USD per square meter in prime location. Scenario 2, short scare, confidence boost. For me, I'm hoping this would be the scenario where Dubai turns out. It's a more optimistic base case, if you would like. So the situation de-escalates within, say, 6 months. No further major attack on Dubai itself, but the psychological safe haven premium is dented. A temporary 15 to 25% correction in over 1 to 2 years as foreign buyer pause and some over leveraged owner sell. Then a gradual 3 to 5 years grind back as population growth and capital inflow reassert themselves. When I research for referencing past case, this scenario probably is similar to the Bali experience. A short, brutal scare after the 2002 Bali bombings, foreign tourist arrival dropped by roughly 60%, and hotel occupancy plunged from around 70% to just a single digit 9% when Bali is just perceived as unsafe. Property price in some tourist exposed segment fell by 40%. The market basically froze for the first 6 to 12 months, and within a few years, prime land value in areas like Simiyak were several times higher than pre-attack levels. So, which scenario would you think Dubai would turn out to be? Given everything above as a current owner, I'm not panic selling to the first wave of fears, especially not at a potentially very deep discount right now. I'm basically a wait and see approach. I'm mentally marking down my investment by 20 to 30% and assuming that I have to hold for 5 more years before I can see a price going back, hopefully to previous level. But investment is a very personal thing, each with very different consideration and affordability. So, if you own a property in Dubai, I would really love to know what's your thoughts. Are you holding, de-risking, or actually selling, or even buying at dip? Because all these real decisions are actually data point for all of us watching here. If you like these type of videos, please follow my channel. I would love to continue to exchange thoughts on the latest business model and investment angle with you all. See you next time.